Hello, everyone, and welcome. My name is Jeffrey Rojas, aka Mr. Unemployable. I am one of the head Forex masters here at Epic University. We will be discussing for the next few minutes one of my favorite topics when it comes to Forex trading, and that's called market reversals. All right, market reversals is a great way to find perfect entries as well as knowing when to get out or get into a trade. All right. So we're going to go ahead and cover market reversals. I'm going to go ahead and show you guys how I structure my market to identify these reversals as they come. And when do I know it's time to enter these trades? All right. So just for an example, we'll be looking at USD CAD and let's see which time frame works best. I'm going to go ahead and look at this chart on the 1 hour time frame. All right. So we're going to go to the 1 hour. And I want to make sure I get a good look at this market right now. Okay, so you guys can pretty much look at this market and identify that this market is going down. It is on a downtrend, right? I'm going to go ahead and draw my lines up here to zone out my market, support resistance. All right, it's going to make this a lot easier to identify. Okay, so we see the market was ranging up here. It kind of broke out of this level, this zone right over here, and start to create an even deeper downtrend, right? Even though the market overall is coming down, it's not just shooting down, it is creating consolidation within the markets and then creating a next zone drop, consolidating there as well, and then dropping down even deeper into the next zone. So, how do we know this market is ready to reverse? When do we enter a reversal market? When do we get in? Here's a simple strategy you guys can use. All right, you're going to use your trend lines. All right, your trend lines will help you identify a market reversal when it will happen. So I'm going to go ahead and take a trend line right here, and I'm going to draw it right at the bottom of this graph, right? As it starts to create its lower lows, right? That means that the lows are happening even lower than the previous lows right here. At the same time, when it's creating lower lows, you can expect the opposite of it creating lower highs, right? So this here confirms we have a downtrend in the market right now with USD CAD. What we look for this market to identify a reversal is that, first of all, we don't want to trade against this trend just yet unless we have full confirmation of where this market wants to go. All right. So right now we have the market coming down. This channel could possibly keep going down, but what we're going to wait for is a reversal. In between, you could trade the channel from north to bottom and north to south and top to bottom, but we're waiting here for reversals, right? So what are we going to wait for to get confirmation of a market reversal entry? When do we know the market is going to reverse, right? Because at one point, this market has to go up. If it goes up, it's got to come down. If it goes down, it's got to come up, right? Every market needs volatility. With no volatility, there's no money to be made. All markets need volatility. Now, what does that mean? That means that the market, if it just continuously goes down, there is no money to be made. If it continuously goes up, there is no money to be made. So the market has to reverse at one point. And when you catch those reversals at the right time, that's when entries will pay you out the most because you get the perfect entry, right? So here we go. We have this channel coming down. It keeps creating lower highs, lower highs, lower highs. It respects the channel, right? Boom, boom, boom. At one point, this market will do this, right? And I want you guys to pay attention and remember this pattern, right? So personally, I like to use my Elliott wave impulse and create a market move from here to here, right? Now, two things can happen here. If the market is not ready to break, then it will come back down, right? And then retest down here, and then just keep doing this over and over until it's ready to break, right? That could be scenario number one. So this is not a reversal. What I'm looking for is this. I want the market to go from here and break out to the top, right? Now, when it breaks out above, it will always come back down and retest the top of that trend. So it breaks, retest, right? So I want to say it's going to retest like around right there. Then it goes ahead and it breaks out to the next zone. And now we are in a motion market to the upside. All right. Now this can come to here. It could come to here. Let's just say for the namesake, it'll come all the way back up here. This is a market reversal pattern, right? I use my Elliott wave to identify this 1, 2, 3 push to the upside. Okay. Now, again, market that breaks at one point has to retest. Now, what I'm about to teach you and show you guys is a little bit more advanced, but just bear with me. Right here in this zone, where the market retraced. I'm gonna just go ahead and put a line right there, and then there's already one right there. Okay. Now the first area where price broke out to, it stopped somewhere. Where did it stop? An area of resistance. It was previously tested as support, previous tested support, resistance, support, resistance, resistance. But it broke out and it did it as resistance one more time. Then it retested this zone, and then it broke out with enough momentum to break through the resistance, now trading it into a support and shooting up to the next level up here, which is the previous area of price action or key level zone right here. Once it gets here, the market comes and retraces again, back down to that support we created before, and then from there we start to shoot up. Once we see this first break and we stop seeing these little lower highs and lower lows being created, the market reversed. It gave us an equal high, come back down. Now this low is no longer a lower low; it is a higher low. Then we get a higher high, right? That means that the highs are being broken to a higher price. The lows are higher than the previous low, so that's a lower high. And it starts to create a market reversal, right? Now, the perfect entry for a trade like this could be one of two ways. You either wait for price action to give you a confirmation, price action, a candle confirmation pattern to give you a break above this, or you enter the market at a retest of this right here, right? Now, this usually will line up as well with another area of support, and it did right there. You see, it lines up perfectly with the price support, and then it breaks above. All right, guys. So hopefully that makes sense. Practice this pattern over and over again because it will help you find perfect entries.